Good afternoon, and thank you for joining our Chart Chat webinar series. Again, my name is Rod Taylor, and I'm an administrator in the Community Engagement and Finance Division at the Michigan Department of Treasury, and today I'll be acting as your host. The Chart Chat webinar series is the Community Engagement and Finance Division's way to share a broad set of accounting-related topics with Michigan local governments. Our goal is information and resources to our finance, accounting, and other elected and appointed officials. And hopefully this will allow us to continue our efforts to be a trusted partner for our communities throughout the state. We hope that by providing a broad set of educational topics to our communities, it will help our elected and appointed officials have the information necessary at that local level so that they can make the best decisions possible for their residents and businesses, thus leading to healthy and vibrant communities and thus a vibrant state of Michigan. We also want to thank you for taking the time to join us today and also for the work that you do at the local level. We know how difficult and challenging it can be, and we appreciate your service to your communities. Ultimately, I hope you find this information today very helpful, and we will start with introduction of our first speaker. So today I'd like to introduce Carrie Vaughn. Carrie is a CPA and is our audit manager within the Community Engagement Finance Division. He'll be sharing information about our number letters, revisions and our updates to our numbered letters and the Uniform Chart of Accounts. Carrie?
Thanks, Rod. Appreciate it. Just like Rod said, we're going to be talking about numbered letters. A little bit of review. We did numbered letters chart chat or two ago, but we're on the verge of issuing some revisions by the end of the year. So we thought it might be good to go over them. As you might know, Treasury issues numbered letters, and they cover statutory items, accounting items, auditing items as well. They range back to 1993 going forward. Actually, on file, we have some that goes back to 1972 are the oldest ones I think we have. Included in numbered letters in the bucket would be MCGAA statements. That's our advisory committee made up of CPAs and officials, and they issue statements as well. We're in the process of merging the former MCGAA statements into their own numbered letters. So there won't be any committee statements any longer. They'll just be folded into the numbered letter bucket as we go forward. Next slide, please. So just one more slide, please. So again, I said they started with 93. The batch that we'll be issuing this time by the end of the year, hopefully don't hold me accountable to it, but by the end of the year, we should have the numbered letters ready, 1993 through 1997. What we've done is we've gone through for formatting purposes, for changes in links and MCLs, and in addition to that, to outright revoke some of the numbered letters that might still be on our website. Some of those that's being removed. The other ones have fairly minor changes. And those minor changes will be like if we're gonna change anything, we're gonna put a new date on it and keep the old date as well. So you'll see like a 1993-04, and then it will have another revised date of 2022 on it. So we won't lose the history, and it will keep the same numbered letter that we've all come to know, but it will have a new revised date on it and a new formatting, and hopefully all the information will be up to date. But the big changes will be the ones that we're going to revoke. And so let me just go through a few of them that we're going to take down. Like MCGAA statement number 2 dealt with building authorities. That's coming down. Number 6 is dealing with deferred compensation. A lot has happened since statement 6. That must have been like 30 years ago, I guess, that 6 must have come out. It was so long ago, maybe 25 years or so. Statement 8, no commitment debt or conduit debt. There's a new GASB out on that. So we're taking number 8 down completely. The numbered letters that are coming down, 93-5 deals with medical care facilities. That's coming down. 95-1. Homestead affidavit refunds, 95-5 due to state accounts for trailer coach park specific tax, no longer needed. And 1997-3 and -4, those are for performance audits. Those hit close to home because back in the day in 97, I was in charge of doing performance audits to road commission cities and villages around the state. It was quite an interesting job to have. I did that for maybe 2 or 3 years or so. And then we decided not to do them for a while. And now I think MDOT is in charge of it. They changed the statute. So those two, 97, 3 and 4, those are coming down. Next slide, please. So since we're doing 20%, and if my math is right, 80% will be done over the next 4 years if we do 20% each year. And by the end of that time, we will have revised all of the numbered letters that we have up and running right now. So hopefully we'll meet that by the end of each year. It'll go through an exposure draft process like this did. So probably, I think it was March that we put out, not March, October, we put out an exposure draft, got some feedback, changed a lot of the stuff. Part of the feedback was ADA compliant. So we made our numbered letters more ADA compliant, which I hope is helpful to some folks out there. So every year we plan on doing the same thing. Oh, and if you look at this batch and you see it, when you see it online, you might see that we've skipped over a few. We skipped over a few just because we couldn't get to them, and we'll hit them in the next batch or two. So there was a handful that we did skip, but we plan on hitting those later. Next slide, please. Uniform chart of accounts. So just to ensure that we're keeping up to date on the uniform chart of accounts, as you may know, back in 2017, 2018, we attempted to issue a massive chart change, and it was a heavy lift. And so we delayed that for 2 or 3 years until 2020, when it was finally released in the revised form that it is right now. But that revision only came after, if my math is right again, 18 years. So in 2002 was the last release of the chart. And then in 2020, we released another one. We don't want to do that again because it took us years and years to revise the new one. And it was too much to put on all the backs of the folks doing it. So over the years, we had several people working on it. The thinking is now to make a small revision every year. So by year end, there will be a revised chart of accounts. So if you go to the next slide. So what we will do is we'll put out an exposure draft, maybe around October. We'll issue 3 copies of it. We'll have a clean copy of the new version, which will have draft on it. There will be a marked up copy with all the strikeouts and underlines and highlights and stuff, so you can see exactly what was changed. And then the third thing is a short memorandum that will say exactly what, maybe in 1 or 2 pages, what's being changed in this release. And so you'll have all 3 of those to go by. And so by the year end, like I said, we will issue a minor change like we plan on doing at the end of this year. Cross my fingers. It could bleed over into January, but we're still on track to get something out by the end of the year. So keep an eye out for that. Some of the notable changes in this revision, and it's not radical, so don't think you need to change all your numbers in your chart. But a few of the notable changes is the Special Revenue Fund 283 and Enterprise Fund 536 has been designated as a land bank fund. A big one is the opioid settlement. We've designated 284 as that fund to use for the opioid settlement, and you should use revenue 685, other revenue, for the revenue in the opioid fund. That's all in there. Debt service fund numbers 301 through 399 have been added to the subtitle of the debt service fund in the table of funds, just a small change. And then something that will make the navigation go a little better. I think if you noticed, you could navigate the PDF pretty well by clicking the headers and footers and the hyperlinks in the document. I thought that was pretty cool. some of those highlights or some of the words in the hyperlinks were kind of confusing. Like you thought you might be going somewhere, and when you clicked it and you went somewhere else until you got the logic of where it was. We're going to just try to clarify the words behind those hyperlinks and make it more clear on where you're going in the first place. So hopefully that'll be helpful. And hopefully it's just as navigable as it was before. Next slide, please. So we've issued an exposure draft on this couple of months ago or so. So again, hopefully by year end, we'll have the release. Let me see if I'm forgetting anything. A lot of formatting. Also, I encourage everyone to subscribe to our Gov delivery system. So if you go to our webpage, probably any webpage on Treasury's website, if you look way down at the bottom, there'll be an email me link or some sort of email or Gov delivery link. Click on that, get on our Gov delivery, and you'll be the first to get these when they're released. Other than that, that's just a short synopsis of what we've done. So be looking for numbered letters and hopefully the chart of accounts by year end. Thank you very much.
Thanks, Gary. And I did just put in the chat a link to the exposure draft for the chart of accounts. So you can easily click on that. So today I'd like to reintroduce Derek Hall. If you recall at our last chart chat, if you were able to attend that, Derek came and spoke about preventable issues for small local units of government, which was a very well received presentation, and he has part 2 today. So Derek, I'll hand it over to you.
All right, thank you very much. So part 2, it was kind of amazing because when I started to ask, what do you think should come into these presentations? What have you experienced over all of your years? And then suddenly my 15-minute presentation became a 20-minute presentation, became a 2-part presentation. So for those of you that were here last time, welcome back. And for those of you that weren't here, what we're going to try and do, if we go ahead and go to the next slide, is kind of look at the other piece of the puzzle. Last time we kind of talked about a lot of procedures, being able to address balance sheet accounts, revenues, looking at things like that. Today, I want to look more at oversight and responsibilities. Who actually needs to be involved. And right there, it's also there with the legislative body. Now, this is not just necessarily for small entities either. I mean, legislative bodies should be involved no matter how small, how large your unit of government is. And then we're also going to look at developing those policies and procedures. So as we move on to the next slide, we're going to see that there's different things, different ways that people react when we start to do these things. But unfortunately, everyone's kind of like, I have policies. We do this, we do that. Why? This is redundant. And then over the years, I take my classes, I do fraud things, I do embezzlements, I do my internal control trainings, and everyone always seemed to have an article of something that had just occurred. And there's always 2 statements that have always stuck out to me. We thought we could trust this person. Okay. And the other one is we never saw this coming. Okay, it'd be real easy to bash the Enron, but that's 20 plus years ago now. Frauds, embezzlement, stuff has still continued to happen. And even if you don't go to that extreme, people still have trouble reconciling bank accounts. People still have trouble, figuring out how to do the books. And so it's not necessarily that it's anyone's fault. It's just a matter of learning and adjusting because stuff keeps changing. But then, like I said, sometimes you don't know where you're at financially because you thought the person you trusted was doing their job. But the thing is who is that we in here? Well, it's your treasurers, it's your clerks, it's your personnel that's doing that. But who's the person that's over them? And these are the people, too, that we want to get encouraged to be more involved with those day-to-day operations, not just from a large or small perspective, but also from the large perspective. We want everyone. We want that we in local units to actually be in play to make it the best local unit that it can be. So if we go to the next slide, we're going to see here that elected officials and governmental employees are accountable for resources entrusted to them and for ensuring that the programs and services are administered effectively and efficiently. Okay, so elected officials, it's not just show up once a month, get your packet, go through the meeting, or rely on someone else to do it. Okay, something that I'm going to keep reiterating over and over and over again is a 3-letter word, and it's just why. If you're never afraid to ask why are we doing this? Why does this number look wrong? How come? We're sitting here doing all of these different things, and you just keep asking why, you'll get to the answer. And it may not be the answer you like, but at least you're going to know. Because unfortunately, sometimes part of the reason we at the stake love to do these chart chats is sometimes the bad things do happen. And I'm not necessarily, again, talking about that someone has embezzled, but something happened that people have turned over. Next thing you know, invoices are misplaced, checks and bills aren't being cut, or bills are being paid, accounts aren't being reconciled. And, we just kind of needed someone to say why, so that maybe we figure this out 2 months after stuff starts to happening rather than 12 months. Because all of these things and these decisions affect that reliability of your accounting records and your financial statements. And again, at the state, we're all for trying to help you have those sound financial statements because, we've had lots of these presentations where we talk about your unfunded liabilities and all of that. We always want what's best for you, and we want to try and give you those tools. But again, it's got to be that team effort. So as we move on to the next slide here, we're going to see that we even have a manual out there. It's on our website. I put the link here so that you can always do it. And it's a wonderful manual we developed to give a lot of the basic procedures. But also at the beginning, we're going to define what that control environment is. The control environment in our world is essentially the tone that's going to get set at the top. It is going to be your legislative body. It's going to be your CEOs, your CFOs, your CAOs. It's the people that are going to be those elected officials, those administrations that are going to set the tone of the organization and influence how everyone is going to go about their daily tasks. Because a lot of times people will sit there and they'll just think, well, they should just do this. You make that assumption that people know how to do the job and they're just going to do it. Sometimes it doesn't work that way. So as we go on to the next slide, we start to look at these factors. And again, some of these, you read through these and you're going, I thought we were doing this. Or it sounds like, okay, but like the integrity, the ethical values, do you actually have a code of ethics in writing? Everyone always assumes everyone's going to be ethical until you end up in that paper saying we thought we could trust this person. The competency of elected officials and employees. You want to make sure that you're providing that training, that you're giving everyone the best opportunities available. The leadership philosophy and the operating style, being hands-on, not hands-off. I'm not asking people to micromanage. Trust me, no one wants to be micromanaged. I totally understand that. But there has to be a management role. The way that management assigns that authority and that responsibility, that is up to the legislative body. That is enforcing the statutes that have been put there for what village treasurers or township clerks are supposed to do. It's the way that you're going to organize and develop your people, getting them the opportunities to be trained, getting them the opportunities to be able to work together, to work to the best of their abilities so that everyone's goals can be accomplished. And it's just, again, all of those above factors combined to set your expected level of behavior for all your employees. Sounds real simple, but if it did, we wouldn't necessarily have HR departments all over the world. We wouldn't necessarily have any issues. We wouldn't have any need for audits, and it'd just be a perfect place. But we know it's not. And that's why, again, it's not just a small thing. Sometimes it's not just a large thing. It's just getting everyone on that same page and being a part of the entire process, not just your standard clerk does this, treasurer does that. I only do what they tell me to do. Okay, on the next slide, as we move forward, we're going to look at also how we do the assessing the risk for your organization. Okay, your risk assessment is the identification and the analysis of your risk, both internal and external, that would prevent your objectives from being achieved. Okay, don't just necessarily look at what might hurt you internally, but also maybe what's going to come from the outside. what happens if you close down, or if one of your larger businesses close down? Okay. Many years ago, I saw taxable value drop. I go to my client. I'm going, what happened? The state prison closed. An $8 million piece of property closed. A lot of taxes gone. And it was time to start to make those adjustments. But again, a clerk and a treasurer filling out your L4029s, you're figuring out what your taxes are going to be. But how you move forward is going to have to be that group effort. And it's trying to identify what is it that's going to be affecting us as we try and move forward into the future. Creating some sort of a risk analysis form for a basis of determining how you can manage those effectively and efficiently. Sometimes that form could just be brainstorming, writing your ideas down, and then doing something formal after that, more of a following it up with more of a written policy, written whatever that you feel best working with. Just starting somewhere sometimes is the hardest thing, but you got to start. And again, just brainstorm, pencil and paper. Sometimes setting that first step, that first brick in a foundation is all you have to do. And then things can start from there. And remember, this is also going to be ongoing and evolving. Employees turn over, economic factors change. We just got done with an election. If we had a different governor, what would have happened then? And it's not just even that, but again, that then affects your budgets. What are they going to do to my revenue sharing? What are they going to do to the gas tax? And then also just internally, over the past year, we've also seen, me personally, I'm a field person, I'm a field auditor. I've gone in to give my presentations to boards and councils, and I'll see 6 members of a council because the 7th one is open. Someone's resigned, someone's moved out, no one ran for the position. There's just lots of things that can happen. And then again, looking at your budgets, where is it you want to go? Not just sitting there hoping that someday we can fix the street, but, can we look at trying to set money aside to do the street, to fix our building, whatever it is that you need, the sidewalks, the trees, the sewer systems. I know it's never ending. But again, we're just asking you to start somewhere, and also everyone to be a part of that process. And of course, now even technology changes, and I'm going to use this example a couple of times. How many people now use debit cards when they're making their purchases? Debit cards weren't even around for governments to use. It seems like 5 years ago, 10 years ago. And now it seems like debit cards are becoming just as prevalent as credit cards in my experiences. So, there's just all these different things that are out there that you have to be aware of. Because it's funny sometimes too, when people get these credit cards and these debit cards and they lose track of who actually has access to them. And then finally, the mechanisms that are needed to identify and to respond to those changing conditions. Again, thinking about what is it that's going to make the changes? What is it we can do? So it's just trying to be ready for that change and trying to figure out how best to keep everything running to the best of your abilities and to the best for your local unit of government. All right, so as we move on to that next slide, it never ends. I understand, for that legislative body, that's what you've been elected to do. You're there to never stop providing that oversight. The internal control systems should be monitored. That's one of the fundamentals of internal control. Be a part of those control systems. Ongoing monitoring occurs in the ordinary course of business and includes regular management and supervisory activities. Don't be afraid to say, can I see that invoice that you want me to approve this expense for? Don't just approve a check register. Ask for the invoice. The internal control systems are going to also change over time. A couple of years ago, we never knew what ARPA was. Now, all of a sudden, you have a lot of money and you're trying to figure out, what do we do with it? What do we have to do with it? Because sometimes you see things and it's like, I'm never going to get those grants. I'm never going to get that money. Pretty much 99.9% of you in the state now have ARPA money, and you've got to make sure that you spend it in accordance with those provisions. Procedures can become ineffective due to new personnel and the effectiveness of training and supervision, time and resource constraints, and other external pressure. Again, one thing in life that's consistent is change. I don't like it either, but we have to be able to be ready for it and address it. And then the circumstances for which those procedures were originally designed may change, making procedures obsolete. And when I first started this job, we would sit there and say, hey, make sure you have triplicate receipts. The white goes to the person paying their bill. The pink is going to go to this person and the yellow goes to that person. Not very many handwritten receipts are written anymore. So if you have a policy that talks about how receipts are supposed to be written and distributed, it's probably time to look at that again. Obviously that's an easy example, but it's amazing how many people don't want to address their policies. And the next thing you know, it's 20 years old. On the next slide. Okay, again, I want to reinforce, well, everything that I've said is great for all units. It just becomes even more important for those smaller units. Okay, I know my presentation said preventable issues in smaller units of government, but at the same time, over all my years of experience, I've seen larger places where board members are not hands-on. And it's funny because sometimes those are the ones that end up with the quotes in the paper. There needs to be as much of a separation of duties as you can, but we know it's not always possible. You have one person to be the clerk, one person to be the treasurer. They try and check each other. I get it. But still, that's why you need to say, council person, please be involved. Please provide that extra oversight. And the council person, needs to just say, hey, let's look at this stuff. Let me see those invoices, take it upon themselves so that there is just even that like, okay, someone actually cares about what I'm doing, because sometimes it even just makes them feel better that someone actually cares about the job that those treasurers and clerks are doing. And also that we want to just put that deterrent in there, like, hey, someone actually is going to watch what I'm doing. They may not have to look at a bank's reconciliation every month, but, like every other month, you sit there and say, can I see it again? Can you just verify it? Spot checks, everything that can be a deterrent, but also, like I said, sometimes people are encouraged that people care about what you're doing. Members of the governing board must be called upon to provide some of those controls, because in the smaller the place, it just isn't going to happen. And the other thing too is in these smaller towns, a lot more people know everyone. You're going to know who the unfamiliar people are, the unfamiliar vendors, and you're going to know if something seems a little out of the ordinary. Okay, but just being part of that governing body, it's part of your responsibility more than ever to be a part of that great internal control system to keep everything running as well as it can. Okay, next slide. So as we do this and trying to help you move forward, this is not just internal control, it's not just fraud, it's kind of an never-ending, evolving process. Promote that strong ethical culture. Be the leader. Don't just expect. People want to know that they're, again, being respected and everything's going the way that, it should. Implement those written policies. Don't just assume that you think people are going to do things. Create that segregation of duties. Make sure that you're not relying on one person to do everything. I understand people have full-time jobs. I understand sometimes it is hard, but you need to segregate to the best of those abilities. Give them the training they need. Okay. And even as elected officials, take the trainings when they're there for you. We know that MTAs and MMLs and all of those out there provide those things. We have our manual that I just had in the slide here before. There's lots of places out there that are willing to help you. Don't be afraid to ask. Don't be afraid to take the trainings. Okay. And organization-wide awareness of your activities. Be aware of all of it. Be a part of the entire process. And establish appropriate channels for reporting the issues, and hire professional advisors and implement their recommendations. There is nothing wrong with asking for help. There is nothing wrong with calling your auditor in February and asking how to do something. So when they come back in December, they don't have 10 months of problems that they have to fix. Okay. No auditor has ever been upset that they've had to fix something now rather than later. No accounting firm has ever been upset that you've asked for help. Okay, and it just works best for everyone that way. Okay, so as we go to the next slide, when you try and do this oversight, use every tool at your disposal. Okay, ask for your budget to actually read it. Okay, if you sit there and you see something is under budget by $100,000 or you're over budget by $200,000, ask why. Don't just assume, figure out why, and then, okay, maybe someone made an accounting error, but double check to make sure it gets corrected. I mean, that budget is your operating tool for where you want to go. Use those other financial reports, your balance sheets, your income statements. Are we bringing in the money that someone told me we were supposed to? Or are we only spending what we were supposed to? Why am I already $50,000 lower in cash than I thought I would be at this time of year? Especially when your taxes come in one time of the year. Look at your check registers. Is there any kind of a weird vendor, weird amounts? And then your payroll reports. Sometimes, unfortunately, people don't file their Form 941s. No one tells anyone, and next thing you know, you've got the large penalties from the IRS. That's why I'm saying government-wide, look at everything. And then as we head to the last couple of slides, the other thing is write down and pass your policies. Okay, statutorily, you need an investment policy. You need the credit card policy. You need the automated clearinghouse or the EFT policies. You need the social security number privacy policy. What's going to happen if someone steals that information? Who's responsible for making the electronic transactions at the bank? Everyone always like, oh, that's the treasurer. The treasurer handles all the bank. Okay, what happens if the treasurer's not there? What happens if something goes wrong? Who's going to do what? It's all those things that yes, I know. It always seems like this is a worst case scenario. It'll never happen to me. We at the state can tell you multiple examples, and sometimes we can just have a whole presentation probably of nothing but examples, but we're not going to do that. We're also going to look at the next slide. Those are statutorily required ones on the last slide. This one, these are all recommended policies. It is not all inclusive, but your ethics policy, your code of conduct, put it in writing. If someone is doing things that you don't want, you have nothing in writing. Are they really doing it wrong? Put in a fraud policy. Make people think about what you want to do, because if it's not written down, it doesn't count. Debit cards, purchasing, personnel policies, put the job descriptions in writing. Capital asset determinations, impress cash, revenue recognition, fund balance, travel policies. And again, everyone thinks everyone just does this or they know. And then all of a sudden I've come in over the last couple of years to places and I go, may I please have an investment policy? What is that? You have credit cards. Can I have your credit card policy? Why? What? So, again, getting it in writing isn't necessarily even this for you, but it's also for going forward. Okay, we have an instance. I got a call the other day. They're setting up a software system. Who's supposed to have controlling interest over that software? Who gets to have that highest administrative right and then decides who gets access to what? If it's already written down somewhere, then it's an issue. And for it to change, a legislative body again then has to come back together to resolve it and talk about it and figure out how to go forward. And again, I know this has been a lot. My last slide, again, is the same slide I had last time. Don't be afraid to ask for help. Okay. I'm not going to sit here and say you should do this, you should do that, and not tell you how to be able to implement the policies, learn about those internal controls. Okay. We're here. We're doing the chart chats, but we're also an email away. Our accounting procedures manual, the link was on the previous slide. We have our bulletins. We have our fiscally ready communities that also do the training sessions. Utilize your auditors. Again, I'm an auditor myself. It's what we want to do. We want to be able to help you out. So just go ahead and continue to use those resources to the best of your abilities. And, it'll work, but it has to be the team for the local unit. So with that, I will end my presentation, and Rod, I will give it back to you. Thank you, everyone.
Thank you, Derek. I'd like to introduce our next speaker, Jerry Nelson. He is a department analyst in our Analytics and Outreach division, and Jerry's going to talk about capital improvements plans. Jerry?
Good afternoon, everyone. So let's get started. So capital asset management and planning. So the goal today is to discuss the importance of capital asset planning, the necessity of active capital asset management, and the policies and procedures required to implement them. So capital asset. So according to GASB, the Governmental Accounting Standards Board, capital assets include land, improvements to land, easements, buildings improvements, vehicles, machinery, equipment. We know all those, right? and all other tangible and intangible assets that are used in operations that have initial useful lives extending beyond a single reporting period, which applicable to us is a fiscal year. So next slide, what is a capital asset? Next one. So what does that mean, capital asset? It's a purchase over a specific dollar threshold that has a useful life over 1 year. Typically, a smaller local government may set a minimum threshold at 1,000, 2,500, while a local larger government may set that same threshold at 10,000 or 25,000. Expenses below this level are considered operational and should be appear in your annual budget. As a local government, you'd want to create a written policy that sets a maximum useful life threshold depending upon what the item is based on your local experience. So for example, if you have a snowplow truck and you're a local government in the Upper Peninsula, it may have a lesser useful life than a local government in the Lower Peninsula that has a significant less amount of snowfall each winter. Typically, a useful service life should be a minimum of 3 years to be included in the capital improvements program. If your local government owns something, you should track it. It's up to local governments to determine what types of expenses are large enough that you need to track the expenses of that object. This creates a uniform way for a local government to track its large purchases, their cost, and useful life over time. This can be a challenge to track. This process is designed to create long-term planning so you know what you currently have and what you need to replace. Some local circumstances change what counts as a capital asset. What do you do with small items such as laptops? Do you group them all together or do you list them individually? You want to be consistent across all your departments. While sometimes it may appear to be easier to group them, it can complicate things with the accounting when you must track an individual item when they're out of service. For example, with the laptops, you may have 50 laptops grouped together, but one of them is no longer usable and breaks. You're going to have to account for that. Another thing to consider is maintenance items versus non-maintenance items. You'll need to decide if they are capital assets. We also want to note that when documenting your capital assets, you want to include everything that you need to make that asset you're purchasing usable for its intended purpose. You have to include all your vendor costs. An example would be a new police car. You not only have the sticker price of that car itself, you have the total amount necessary to make it usable for its use, which is logos, lights, equipment, everything to make that a police vehicle. Next slide. So let's discuss a capital asset policy. All local governments should have one. It can be a standalone policy or it can be part of a purchasing policy. So why do you need a policy? What is the benefits? Well, it helps you track the assets you have, helps you decide when it's time to replace those assets, and it helps you decide when and how you're going to dispose of those assets. Your local government should have a written capital asset policy. This type of policy can have a lot of flexibility, but it should be based upon your local circumstances and be, again, consistently applied. It should talk about things like new capital assets, disposing of old capital assets, how you do inventory, condition of your assets, and whose approval you may need in different circumstances. The idea needs to be consistent. Next slide. So capital improvement program. Let's start talking about a capital improvement program. Next slide. So Planning and Enabling Act. The Michigan Planning Enabling Act is an enabling statute for the creation of a planning commission and a local government's adoption of plans, master plans, and so on. This act is for counties, townships, cities, and villages. It took effect in 2008 and replaced the County Planning Act, the Township Planning Act, and the Municipal Planning Act. It requires the Planning Commission to prepare a capital improvement program annually. That needs to be based on priority, needs within 6 years, requirements of structures and those improvements. Departments need to be submitting requests, and it's, again, contingent on the Planning Commission recommending that capital improvement program. Next slide. So capital improvement plan is a blueprint for planning a community's capital expenditures. It coordinates planning, financial capacity, and physical development, and is a management tool for the budget and planning process. Upon adoption by the City Council or top legislative body, the CIP becomes a statement of city policy regarding the timing, location, character, and funding of future projects. The CIP represents the legislative body's best judgment at that time. However, future needs, financial constraints, and grant opportunities may make you have changes over that 6-year period. So you're actually looking at that on an annual basis to actually account for those changes. Your CIP threshold does not need to match your capital asset threshold that we talked about before. The CIP is a communication device to show your replacement schedule. It may include items that do not meet the threshold for your capital assets, but you need to replace those for replacement or track those for replacement purchases. An example would be like street banners or a 5-year recreation plan update. Or if you're a large local government, you may not want to include all your capital assets in your capital improvement program. Next slide. So determining what projects you're going to fund, how do you ensure that you're saving for those items you need? Are you using the CIP process to help maintain existing services and infrastructure? You already have numerous assets. Are you taking care of those things you already have? What is your process? And again, is it consistent? How do you prioritize different items between different departments, some of which may be more critical? Do you use categories? Do you weight them? For example, public safety and health, probably at or near top for most local governments. You also need to look at the impact on the operating cost of revenue. Are you considering future costs or incomes based on that project? Example would be if we don't fix this road today, is it going to cost us twice as much 3 years down the line? That needs to be part of the factor in your decision making. What projects would it make sense to combine so that you don't undo finished work? Example would be tearing up a repaved road that you did last year, repair a sewer line. You could have looked at combining those projects so that you could have delayed one and combined both together. Do you look at projects which affect the quality of life of residents? Do you prioritize projects with the help of local tax base or help existing businesses thrive? Do you consider how long an investment will last? Example with that would be you have 2 projects, both may cost $100,000, but one's going to have a useful life of 20 years and the other one's going to have a useful life of 5. Which one are you going to prioritize? You need to take that into account as well. Next slide. So tracking, do you have a process to track future projects? Do you have a list of what they are, the costs, how you're going to fund them, etc.? What would happen if you suddenly need to replace something early? You need to take that into account. So a minimum plan is 6 years. And then when we're talking about long-term assets, those are actually longer. An example would be, a municipal office, water sewer systems. Those can be 20, 40 years down the line. So you need to try or keep that in account as well. So next slide. Let's look at some takeaways. So after today, if you're going to implement any of this information, you need some takeaways. So here's some 4 broad points. As I stated earlier, you must commit to the process. It's going to take time and effort. Develop consistent processes and apply them uniformly across your local government. Stick to your timelines and implement according to your procedures. Next slide, please. So to break it down just a little bit more, a majority must support this process. You need buy-in and commitment from top to bottom. Create any policies or procedures that you may be lacking at this time, and then distribute to all your staff. Review and update your policies and procedures. Train your staff, and make sure your policies make sense and that you're actually following them. Next slide. Set some community goals and priorities. Elected bodies should set strategic parameters. Coordinate between all your various plans and documents. Review your asset thresholds. Do they make sense for your local government? Review your asset list. Is everything complete? Is there anything missing? Is there anything that surprises you? Create an annual process to update your CIP. If it's staff, who's this going to be? Include your planning commission. Tie your budget and planning commission together. Your CIP should be approved as part of your budget. You could have a joint meeting with the planning commission. And create a funding plan that includes allocating funds for new items and all assets that need maintenance. Next slide. And let's go to the next one, and we're going to talk about the Michigan Infrastructure Council. It's a great resource. They have an asset management tool. The link's there. They work with the whole state. This is just I encourage everybody to go and take a look at this. It's going to be very helpful. And then the final slide is a fiscally ready communities best practices guide. This link will get you to a useful tool that can assist communities with implementation of best practices. I also encourage everybody to take a look at that as well. So with that ends mine, and I'll take that back to Rod. Thank you.
Thank you. So our next presentation today is on calculating debt limits, and our speaker is going to be Harlan Goodrich. He is a manager in our municipal finance area. Harlan?
Hi, Rod. Next slide. All right, so let's glad to be here this afternoon. Let's talk about debt limits. So I guess the first thing to consider when you are thinking about borrowing money is that for every debt issuance, you need a statutory authority to borrow. So I guess as step one, what is my statutory authority to borrow? A debt limit that is defined as the total amount of money that a municipality is authorized to borrow. And when we're talking about how much you're authorized to borrow, the debt limitation is determined by specific statutes. And those provide explicit language on how to calculate the debt limit, and also what types of debt may not be included in the calculation. Next slide. So here is a large list of the various statutes. You can see each type of local government, has its unique statute regarding debt limits. I think overall today they're pretty close, but if you're calculating yours, I would certainly pull up your statute. You can look at this list later. It'll take you right to the specific section, and hopefully make that easy to find for you. Next slide. So the debt limit calculation itself, it starts by finding the municipality state equalized value. So that's kind of the foundation of our debt limit. So we're gonna go through an example. So in our example, we're gonna start with an SEV for a community of $180 million. Next slide. You can add to that SEV, which is we could kind of consider that your foundation, what we call an assessed value equivalent. So that's like, it allows certain revenues to be added to the SEV, and what it does, it would increase your debt limit. So those specific revenues would be state revenue sharing payments. There's eligible reimbursements under the LCSA Act, and then specific tax revenue from industrial facilities tax or commercial facilities tax. Under the eligible reimbursement for LCSA payments, I do have a note there about our numbered letter 2018-4. That is a great resource. I will say we are in the process of revising that right now, so we will have that refreshed for you sometime, hopefully early 2023. Next slide. So I guess we like to say, think of it this way. If those revenue amounts that you get were derived from property taxes, like what would be the taxable value that would generate the same amount of revenue? So we're going to go to our example here. We have our SEV of 180 million. let's say this community levies 20 operating mills. So what we're going to do, we're going to take the revenue and divide it by the operating mills. So if we look at our revenue sharing example, this particular community in a year would get $2.8 million of state revenue sharing. We divide that by the millage rate, and it comes out to an assessed value equivalent of $140 million. So if that, let's say that $140 million, if that was a taxable value at 20 mills, it would create $2.8 million in revenue. So it's kind of the inverse way of looking at it. So you do a similar calculation for the LCSA, then the IFT and CFT. You can see the two examples there. And then once you get in this example, the three assessed value equivalents, you add that with your SAV. So once we take our 180 plus our 140, and then the 16 and 3, we come up with a total of 340 million. And then we take 10% of that, and that is our debt limit. So in this example, our debt limit would be $34 million. Next slide. Certain types of debt are excluded from the debt limitation. And the one we see most commonly would be revenue bonds, typically water sewer projects. So, within the statute, there would be specific language that would exclude them. So you can, definitely look for that specific language. In this example here, we have our $34 million debt limit. This community has $25 million in outstanding debt, but $4 million of it is attributed to revenue bonds. So those are excluded. So only $21 million would be subject to the debt limit. So they would be able to borrow an additional $13 million. Next slide. So this is an in-depth look at what we just discussed. So the example that we gave, those exact numbers are in this slide. I would recommend, when we're done here today, and this is online, you can go take a closer look, maybe look at some of the more details here as part of this calculation. Next slide. So when we talk about available assistance, if you're thinking about issuing debt, we highly recommend you contact a municipal advisor or an bond counsel. So they will help you when you're like, what's my statutory authority to issue this debt? They will help you with that, the debt limits, your overall debt portfolio, navigating the borrowing process through Treasury, and selling, the bonds or notes. So we highly recommend you contact a municipal advisor or bond counsel. We have some new online videos on our actual borrowing process. So if you've heard us talk in the past about qualifying statements, prior approval applications, security reports, if you go to our website here, michigan.gov/CEFD, and then there's an education training resources link, and then there's a video library. So we actually have 8 videos out there on these 3 different reports. There are YouTube videos. Each video is approximately about 5 minutes. So we certainly encourage you to use that resource. If you have any questions on your debt limit, there's our email address. Send us a message. And I just kind of want to advertise our municipal finance team. In addition to myself, Harlan Goodrich, we also have Bill Sanders or Jeff Schwartz. So if you do have a question, one of us would be the person that would be contacting you. So that concludes my presentation. Thank you.
Thanks, Harlan. Now we'll do a few questions and answers. We'll start with Jerry on capital improvements plan. Jerry, are there any instances where locals are exempt from having to develop a capital improvements plan?
Well, yes and no. The planning, the act says the planning commission is the required body, but they could be exempt from that according to their charter. However, then it does go up to the legislative body, the local government. They are now responsible for completing that annual requirement.
Okay. Another CIP question. You mentioned part of the process to update your capital improvements plan that you should include the planning commission and incorporate it with the budget process. Can you talk a little bit more maybe about best practices for combining the statutory process with working with your planning commission as well as working with your budget at the same time?
Yeah, well, example would be from a local government I worked with in the past. What they would do is prior to this joint meeting, they would have all the department heads work on requests with their staff for capital improvements in their certain areas. The local government would then hold a joint meeting with the city council and the planning commission, where each department head would present the requests that they finalized and decided on. This will allow the officials not only to hear the justifications from the department heads, but they could also actually ask questions and have some give and take back and forth. The meeting would also take place in the early stage of the annual budget process so that it could actually be incorporated into the budget process early.
Thank you. Thank you. Next question is Carrie. You talked about the chart of accounts updates and you talked about the number letter updates. And obviously, as you mentioned during your presentation, when we did the big accounts update, it was a large impact. What is your thoughts on updates that locals may see in 2023 from your office, your area?
Yeah, thanks, Rod. Other than the annual updates that we'll do for numbered letters and chart of accounts, we're planning on issuing a budget manual. The existing budget manual is quite good, but we just need some refreshing, and it's been reworked quite a bit, and I think it's going to be issued in 23. Some other items that we're looking at is the transit manual. The transit manual, I think, was 07 when that was done. I would like to do that's a big project. We might start it in 23, but I don't think it'll be finished in 23. And I'd like to look at the uniform reporting format. That needs a refresh as well. I know that the County Road Association is looking at the road manual that was just released, but there's some other bigger items that they might want to do a refresh on that. So that's a quick rundown of the ones that we have on our radar at this time.
Okay. And, you also mentioned, obviously you talked about the chart of accounts changes, but one of the questions I got in another conference that we had presented at was, it seems like, the chart of accounts, there's been a lot of changes since we did that big update. Can just, refresh the fact that, that this is the impact that this chart change is going to have this year versus what it's been in the past?
Yeah, this year, if you go to our website, it'll show you, remember I talked about the 3 items that you were going to have. One of those items is a memorandum that shows you all the different changes on that particular revision. And I spoke to a few of them today, but if you go onto our website, there's about a page and a half, pretty detailed differences or changes that we're making on the chart. So I would go to the website and check that out. But there's nothing as huge as the 2020. So if you're apprehensive about another chart chat, you got a little bit of PTSD going from 2020, be at ease. That's not a big deal. The changes that you made from the 2020, they're still in effect. We're just doing some tweaks and some freshen up of the chart.
So it's fair to say that most of the changes are just improving the reading of the document, adding some new things that came down, not really a lot of changes. Is that fair to say?
Right. We're not taking, if you're using account A, we're not going to change it to account B. Like that's the worst criticism that we get. Hey, we've been using this account for years and now you're changing it. We're not doing that. We're adding a few new accounts. I touched on them today. And that's about it. We're doing some reformatting, putting in some fixes to some of the errors on the 2020 version. So it's nothing like the 2020 version at all.
Thank you. Thank you so much. Nick, can you give us a quick, I know there's a couple of questions that came in the Q&A, but can you remind everybody how they can find a copy of this presentation and where the timeline for that will be available?
Yeah, so we have a copy of the PDF version of the presentation available now. I'll post a link again in the chat here. And so you can get a copy of today's presentation through that link today. And then probably within the next week, we'll have a recording of this webinar with closed captions and all that fun stuff on it. And that will be available on that main webinar page, which I'll also post another link to here as well. And you can find this recording as well as previous webinars that our Bureau has hosted over the last year or two or three on previous topics. So check that information out as well as michigan.gov/CEFD for Community Engagement and Finance Division. You'll find some information there and tools and resources for local governments as well.
Excellent, thank you. And again, that website is michigan.gov/CEFD, so Community Engagement Finance Division. And our last question is for Harlan. What are other qualifications to issue debt outside and beyond the debt limit consideration you talked about today?
Yeah, so I guess the everything which is really kind of under the Revised Municipal Finance Act, which is PA 34 of 2001, that kind of encompasses the borrowing process. So really, it's like a three-step process. You fill out every year you fill out a qualifying statement, which is I guess I would call like a fiscal test. And if you pass, you can go ahead and issue debt for the next year without Treasury's approval ahead of time. And then when you're done, you would send us a security report to kind of let us know that you issued and some details about the issuance. If you do not pass that qualifying statement test, you can still borrow, but there's an extra step in there. There's an application process you would submit to Treasury, and then we would review that. And then again, you would end with a security report if you get Treasury's approval to borrow. So that borrowing process, we actually have a flow chart. If you'd like to take a look at that, if you go to the website that was put in chat with /CEFD, kind of at the bottom of the page, there's like a little municipal finance section in the middle. There's a borrowing process flow chart. So, and again, I would just like to encourage everyone take a look at the online videos that we have. Same website. There's an education and training resources. And then I think there's a video libraries link under that. So, each of the videos is kind of set up in a manner, like we have one video kind of explains like what the form is, like what's a qualifying statement. So you can get a video on that. And then also how to file it with Treasury. So how to navigate our system. That's the format. And we certainly encourage you to, educate yourself using those videos. So,
Harlan, one of the questions that we got the other day was, sure. Is this related to just issuing bonds? When you say borrowing, does that just mean bonds, or is it more encompassing than that?
It would be certainly bonds are a big part of it, but it would also include like short-term notes. Like if you get a tax anticipation note or a revenue sharing note, that would also be under this. But really, like anytime you're thinking of any type of bond, note, loan, anytime you're borrowing money in any way, you would need to get some statutory authority to do that. So, but it is really more than just strictly what we'd say bonds. But
yeah, and local units of government sometimes will get themselves in trouble because they'll go to the local bank and receive a loan, and they've not verified that they have that statutory authority that you mentioned. Is that correct?
Yes, we do see occasions of that. People, especially in a smaller town where you have maybe a closer relationship with the banks. I guess it may seem like easy to get a loan in that manner, but the question you have to always ask yourself when you're thinking about borrowing is, what is my statutory authority? So it all kind of come back to that. Statutory authorities out there really we're not there to be cumbersome and make it a longer process, but to protect the local units. That's why there are things like debt limits and to have the statutory authority to borrow. And there may be certain limitations on how much of certain debt you can get. How long the debt can go out, interest rates, that kind of thing. So it is out there certainly, looking out for the best interests of the community.
Thank you, Harlan. And like you said before, talk with your municipal advisors, talk with your attorneys, et cetera, before you're issuing that debt to help ensure that you're in compliance. So, all right, so that now reached our end of our webinar. We thank you once again for joining us today. We hope that you found this information valuable.